The central message for July 30th, 2026 is balance. The tape is clearly under pressure in high beta technology, especially semiconductors, but the dashboard is not confirming a market-wide panic. QQQ is below the daily 20 and 50 EMA area, so the short-term chart needs repair. At the same time, VIX is below 20, the credit proxy is not breaking down, and financials are leading on the 5-day leadership line. That combination argues for a choppy digestion regime rather than a confirmed crash. The practical posture is not to chase a bounce and not to panic sell a pullback. Watch whether QQQ can reclaim its moving average cluster and whether semiconductors stop making the market do all the downside work. The important discipline is to wait for confirmation across price, breadth, volume, and the risk dashboard before changing the whole plan. A single candle can start the repair, but the follow-through tells us whether institutions are accumulating or only covering shorts. The regime label is choppy upward trend with technical digestion. This is the kind of market where the index can feel heavy even while capital is still rotating inside equities. The daily monitor shows institutions as mostly in, but with retail sentiment unavailable or cautious, and NAIM unavailable. That lowers confidence, but it does not automatically raise crash risk. A pullback becomes more dangerous only when support failure, volume expansion, breadth collapse, and risk dashboard stress appear together. Today, the dashboard says no broad systemic stress. So the burden of proof is on the bears to show that this is more than a leadership reset. The important discipline is to wait for confirmation across price, breadth, volume, and the risk dashboard before changing the whole plan. A single candle can start the repair, but the follow-through tells us whether institutions are accumulating or only covering shorts. QQQ is the key rhythm chart. Daily QQQ closed at 683.55, below its 20 EMA at 697.43 and 50 EMA at 700.36. That is short-term damage, and it means repair is required before calling a clean upside continuation. But the weekly frame is less broken. QQQ is near its 20-week EMA at 681.00 and still above the 50-week EMA at 638.91. This is exactly why time horizon matters. Long-term holders should not treat every daily break as a full-cycle reversal, while swing traders should respect that the daily moving average cluster is now resistance until reclaimed. The important discipline is to wait for confirmation across price, breadth, volume, and the risk dashboard before changing the whole plan. A single candle can start the repair, but the follow-through tells us whether institutions are accumulating or only covering shorts. The clearest signal is sector rotation. The 5-day leadership line shows SMH and XLK sharply lower while XLF is positive. The weekly line tells the same story. Semiconductors and technology are lagging, while financials remain the relative leader. That does not make the market risk-free, but it changes the interpretation. When all sectors sell together, risk rises quickly. When high beta growth is sold and money parks in financials or defensive areas, the market may be digesting leadership rather than abandoning equities. The next test is whether that rotation broadens constructively or becomes a synchronized sell-off. The important discipline is to wait for confirmation across price, breadth, volume, and the risk dashboard before changing the whole plan. A single candle can start the repair, but the follow-through tells us whether institutions are accumulating or only covering shorts. The risk dashboard is the reason not to use crash language today. VIX is elevated from recent calm but still below the usual panic zone. Equity put call is not showing panic, and the HYG versus LQD credit proxy is not breaking down. The dollar is firmer and rates always matter for high-duration growth, but the 10-year yield is not showing an explosive 5-day spike in this snapshot. Put together, the dashboard says mild stress at most, not systemic stress. A correction can still deepen without a crash, but a real crash risk call requires credit, volatility, breadth, dollar, and price structure to confirm together. The important discipline is to wait for confirmation across price, breadth, volume, and the risk dashboard before changing the whole plan. A single candle can start the repair, but the follow-through tells us whether institutions are accumulating or only covering shorts. The semiconductor and AI hardware complex is doing the heavy downside work. SMH is down 7.11% over 5 days. SOXX volume is above average, and several high beta names are either below daily moving averages or in downtrend structures. That is technically serious. But the next question is fundamental. Did AI capex, HBM demand, backlog, margins, or customer validation actually break? If not, the sell-off may be a positioning washout that needs time and price repair. If guidance or demand evidence weakens as well, then the market will reprice more aggressively. For now, separate the trigger from the root cause. The important discipline is to wait for confirmation across price, breadth, volume, and the risk dashboard before changing the whole plan. A single candle can start the repair, but the follow-through tells us whether institutions are accumulating or only covering shorts. The base case is continued digestion with rotation. The bull case is straightforward. QQQ reclaims the daily moving average cluster. Semiconductors stop leading the downside, breadth improves, and the dashboard remains calm. The bear case is not simply another red day. It requires failed support, weak rebounds, semiconductor pressure spreading into broader sectors, and stress gauges turning together. This three-scenario frame keeps the process disciplined. Instead of predicting tomorrow's candle, define what would confirm each path and adjust position size around evidence, not emotion. The important discipline is to wait for confirmation across price, breadth, volume, and the risk dashboard before changing the whole plan. A single candle can start the repair, but the follow-through tells us whether institutions are accumulating or only covering shorts. For the next session, the watch list is narrow but important. First, QQQ needs to either reclaim or reject the daily 20 and 50 EMA cluster. A fast reclaim would suggest Tuesday's pressure was being absorbed. A rejection keeps the digestion window open. Second, SMH and SOXX need to show whether semiconductor selling is exhausting or accelerating. Third, financials and defensive pockets tell us whether money is rotating or leaving. Finally, monitor rates and the dollar. If growth is already repairing, a fast move in yields can make the repair more difficult. The important discipline is to wait for confirmation across price, breadth, volume, and the risk dashboard before changing the whole plan. A single candle can start the repair, but the follow-through tells us whether institutions are accumulating or only covering shorts. A mature risk plan keeps two hands prepared, exposure for upside and cash for downside. If you already own quality core positions, the goal is not to sell the beginning of every attempted repair. If you are underinvested, the goal is not to chase the first bounce after a large drop. Planned adds belong near support stabilization, a gap fill setup, or a confirmed reclaim. Planned trims belong near resistance if volume is weak and leadership remains narrow. The behavior to avoid is leverage. Leverage turns normal digestion into forced decisions, and forced decisions often happen at the worst possible price. The important discipline is to wait for confirmation across price, breadth, volume, and the risk dashboard before changing the whole plan. A single candle can start the repair, but the follow-through tells us whether institutions are accumulating or only covering shorts. The closing takeaway is simple. Today's data supports caution, not panic. QQQ and semiconductors need repair, but the risk dashboard is not confirming systemic stress. The highest quality opportunity, if it develops, is likely to come from patient support tests, stabilization, and reclaims, not from chasing a reflex bounce. Stay scenario-based. Base case, bull case, bear case, and confirmation for each. This is market commentary and educational content only. It is not financial advice, and it is not a personalized instruction to buy or sell any security. The important discipline is to wait for confirmation across price, breadth, volume, and the risk dashboard before changing the whole plan. A single candle can start the repair, but the follow-through tells us whether institutions are accumulating or only covering shorts.